Hey traders, checking in on the stock market today. Yet another day of euphoria, but I've had enough. I'm looking short. I'll show you the sector that I'm keeping an eye out for a short entry in tomorrow and how I plan on doing so, ensuring that I'm not just going to constantly give back profits shorting a bull market. Let's check it out. So in the video yesterday, we talked about the simple, clear pattern that we can use to know when short-term momentum is shifting. And it's the pattern of a higher low every single day. You can see that we have kept that pattern intact for day number 7 in a row. And while we did break the all-time high, we didn't get much follow through. If this pattern is to break, the bears need to break 389.17 tomorrow. Today, we had the exact opposite of yesterday as far as the first half hour of trading. It was the financial sector seeing weakness, and it was the healthcare sector at the high of the day and the tech sector up near the high of the day. Yesterday, it was the financial sector seeing strength, and the healthcare sector was at the low of the day. They're doing their rotation game, and that is keeping the S&P 500 strong. Have to see 389.17 break tomorrow for daily consolidation to then be underway. We know we're scouting a daily higher low, but we just reach a point where I can't be comfortable making bullish entries up at these levels. Give me a daily bull flag, and I'm then comfortable looking bullish again. And we'll be watching when we do get daily consolidation. There are tons of individual names and individual sectors where we are going to be scouting daily higher lows, first hourly oversold bounces. So the bullish plays are not going anywhere. It's just being in a position where I am comfortable looking bullish after at least a little bit of a pullback. I am going to be looking short tomorrow in the MJ sector. The MJ sector has been on absolute fire recently. Here's APHA. We can see in the last 6 days, we've gone from a low of 12.12 to a high of 24.14. Essentially a 100% move in 6 days. And if we zoom out even further, it's just the weekly chart since the last real consolidation has gone up almost 300 to 400%. We're reaching levels of extreme euphoria, and I am watching for a bearish entry. When I am fighting momentum, number one, I have to have complete discipline knowing that I am not going to let a stop loss skip, that I'm not going to place a stop loss and get stuck in a trade and blow up my week's profit. I know that I'm going to put myself in a tolerable risk scenario. To do so, I have to have a clear resistance level nearby. Shorts get in trouble when they just enter and then they average up and then they enter again. They have no stop loss, they have no game plan, and they get squeezed. I have very little risk if I have a clear stop level to go off of. Let's say that APHA opens at 23.72 tomorrow. It tries to break the high of today, 24.14 first thing. It fails at 24 and then it drops down. If I short right at that point and I put my stop just above the high of yesterday, I have a very small risk. Maybe I'm risking 30, 40 cents and the reward is potentially $2 on a pullback. So it depends on what the open's going to be. That significantly changes my game plan. If we're going to gap up open, it's a much different setup than if we're going to open under the high of today and have that resistance level to play off of. But that is the direction that I'm looking at tomorrow. And if the setup isn't there, then I just let the trade go and I don't do anything. That is the most powerful tool, or I should say, the most power that we have as traders is that we choose when we trade. I don't have to trade tomorrow. If the setup is not prime and exactly what I want, I don't do anything. And at worst, I miss an opportunity, but I know that in this market environment and over the last decade of trading, there is always another opportunity tomorrow. So I am looking short. I will have a clear stop level nearby. I will not continuously short against bull momentum. And the broader market's going to have an impact. We have to see broader market consolidation for individual names or individual sectors to have help on any pullback. So tomorrow for me, it'll be all about SPY 389.17 support. IWM, same pattern, higher low every single day, 7 days in a row. So our new line in the sand level short term is 226.31. If that level breaks, we look for first hourly oversold conditions. We look for a daily higher low. So I'm looking short tomorrow, but after a couple days of pullback, I'm going to be looking for daily higher low entries. So just very short-term mindset in this market for me personally, and I cannot help but have extreme caution based on what I'm seeing on social media from my friends and family and the text messages that I am getting with people just having never had any interest in the market whatsoever and wanting to buy whatever flavor of the week stock is popping up on their social media feeds. And it just is a level of euphoria that I have never seen before, as far as crypto going crazy, marijuana stocks going crazy, the broader market going crazy. So for me, it's just getting ready for turtle mode, which is when I just protect all of my positions. I protect all of my profit I've made on the year so far, and I go mostly cash and treat it with a very short-term mindset. And I'm almost there. QQQ. Higher low every single day, 7 days in a row. Have to see a bear break of 332.61 for any downside follow through. If that level does not break, the bulls keep complete control. They've been hitting all-time highs 3 days in a row at this point. And again, tons of space for a daily higher low to form once we do pull back. The financial sector, higher low every single day, 7 days in a row. You get the idea. All-time high in play, 31.62. The bears would have to break 31.08. Healthcare sector still sideways. Multiple daily inside bars. If they break bearish, it's all about 114.62 support. If they break bullish, it's all about 117 resistance. And we know that a volume and volatility spike is coming tomorrow in the healthcare sector because you can't trade tighter than that. Very small range today of 40 cents. So the inside bars will break tomorrow. I'll put my reputation on the line. We'll see which direction it breaks. If we're going to get bear follow through, we need SPY, XLV, XLF, and QQQ all to break the low of today. If only one or two of our sectors do so, we know it's not going to be a powerful bear move. Biotech sector, new all-time high today, but straight into a pullback. So we zoom out. Is the hourly uptrend still intact? I would say the answer is yes. I would say anything above the low of yesterday was an hourly higher low, and we would have to see a confirmed hourly downtrend to see further daily consolidation from here, in which case we would then watch for the first hourly oversold conditions as we scout a daily higher low to try and form. Semiconductors, bull break, all-time high 246.79, but again, not much going on. Big bull day yesterday, a lack of any significant follow-through today, and 241.23 is our hourly support. We set it first thing, we saw continuation, and then we consolidated but held that low of the day into the close. Solar sector, 126 resistance is approaching. Bulls are slowly making their way back to that level after not really participating significantly in any strong way over the past few days. Today is a more bullish day than we've seen in a couple weeks with the volume and the strong close and a green Marubozu candle. MSOS, USMJ, higher low every single day, 9 days in a row now. And again, same thing, very extended, but we have to lose the pattern of a higher low every single day if we're going to see any bear follow through at all. Volatility sector, so UVXY dropping down to lower lows as the VIX is pretty much just sideways here. So why do we see periods where the volatility index is going green while the S&P 500 is up at the all-time highs? We can assume that it's people hedging. People in this market are smart. They know after going up 8 days in a row or however much it's been that we're due for some consolidation. So to protect their profits rather than exit their bullish positions, they start to enter some volatility positions knowing that when the market pulls back, the volatility sector will bounce with that move. So UVXY, if we were going to see any kind of notable shift, it's the hourly that has to do it. And if we look at regular trading hours, we have not confirmed an hourly trend change yet. Little double top, 1022, 1025, anything under 1025, just an hourly lower high. Worth paying attention to. Again, due for a little short-term move up at the least, but no sign of it yet. Checking in on the dollar, third day in a row of a pullback and a big red day today. So what this is now shaping up is even though we are still in a daily uptrend at this point, next time we bounce, we're just going to be looking for a lower high compared to 91.60. And if we then confirm a daily downtrend, our weekly lower high will be set and we'll then be scouting a weekly higher low compared to 89.20. So asset bulls liking the amount of pullback that we've seen over the past few days in the dollar, specifically the metals. 3 red days on the dollar, 3 green days on the metals. 3 red days to end last week, 3 green days to end last week. Inverse, the dollar and the metals are more inverse to each other than the dollar and other assets. We're watching the 4-hour uptrend on gold. It's still intact at this point. When we lose the 4-hour uptrend, our daily top of the bounce will be set. And again, all I care about is, can the bulls confirm a daily trend change for the first time in 5+ weeks to shift momentum? Silver is scouting a daily lower high, and that's a bearish candle on the daily. If the low of today, 27.06, breaks tomorrow, our daily lower high will be set, and we will be scouting a daily higher low compared to 25.90. Tightening daily range with the potential that our lower high is set. Bears have to follow through tomorrow for that to be the case. Miners, daily lower high is set here. Double top at 51.64 and 51.50. So I'm viewing this as an equilibrium with our low, high, higher low, lower high, and we're now scouting a higher low, anything above 48.28 to continue tightening up into next week potentially with 3 more trading days this week. Could stay within this tightening range. Oil, bulls keeping control. 4-hour higher low set this morning. We would have to fail 58.62 and break 57.27 to confirm a 4-hour downtrend and confirm daily consolidation. Oil has seen a higher low every single day for the last 6 days. Certainly very similar correlation to the S&P 500. It's worth paying attention to. I'm not saying oil is driving the S&P 500, but they are definitely sharing correlations with each other, and we can potentially pick up clues from that. Natural gas, still trying to set a daily higher low compared to 2736. 4-hour trend change back to the bulls is needed, and we're not close to seeing that take place. All about 2736. If that level breaks, the rejection from monthly resistance will be a lot more notable. It will be a failed trend change attempt at that point. So bulls really want to keep up that daily uptrend. So we know what we're watching tomorrow. Higher low every single day pattern on SPY, IWM, XLF, QQQ. Does that pattern remain intact? Does that pattern break? Does it break for everybody or just some sectors? Do we have bearish entry opportunities? When I approach the morning as a day trader, I'll see the setup and I will oftentimes eliminate one side of the trade. So if we're gapping up on SPY, I'm only looking bearish if I'm looking for a trade in the first 20 minutes. I can look bullish for an hourly higher low after we pull back a bit, but I can say to myself, okay, for the first 30 minutes of trading today, I'm either entering a position bearish or I'm not entering at all. And that just eliminates half of the possibilities. It keeps things nice and organized in my brain. And that's where I stand with the market right now. So I am watching for bearish entries for short-term positions, knowing that we are just going to be looking for daily higher lows to form. I'm going to be looking to potentially get a bit aggressive in the Canadian MJ space with how extended things have been. But I will very quickly exit any short positions if we do not see any broader market weakness. That's my game plan. What's yours? Do good things. Have a good rest of your day. We'll see you tomorrow.